Welcome back, everyone, to the Dividend Dudes. I am Brian, and I am so glad you are here because if you weren't here, then I would be talking to myself, and that would be just weird and sad. So we're talking NVIDIA today, which is surprising because they have almost a non-existent dividend, and we are the Dividend Dudes after all. Now, it's because they just dropped their earnings call, which we'll put the links in the description below, and we need to talk about the 2.8 trillion pound elephant in the room. But first, let's see how our portfolio is doing. As you can see, we have just shy of $42,000 in the account, which we started with $400 2 years ago and have grown it since. So it is doing actually pretty well. Looking at our stocks, we have most of them in the green. We have 4 red, which is doing pretty good. Looking at our dividends, we are sitting at $1,300 a year, $110 a month, which is down from last month, which was $122 because 3M cut their dividend. Not surprising. We'll get that back up after this month's purchase. NVIDIA started out making graphics cards, which both Tom and I use, but have been branching out to data center, HPC, high performance computing workloads, think quantum computing, genome folding, stuff like that. AI, 400 gig networking switches, cloud computing with Microsoft, and of course AI CPUs, which powers anything from autonomous self-driving cars to manufacturing robots. Out of all these right now, they make their most money out of data center operations, but it seems the sky is the limit for AI, and that is why I think they're piling into NVIDIA today and trying to get that gravy train, get some of those rich growth stock revenues. Now, Intel, AMD, Taiwan Semiconductor are all also making their impact known in the AI space, making their own chips. But for now, NVIDIA is paving the way. But do they deserve as much love as Mr. Market is giving? Let's take a look. We have their first quarter results right here, and they are crushing it, just absolutely crushing it. They're up quarter over quarter, year over year, even more. As you see, the revenue's up to 26 billion. Gross margin is 78.4%. This is GAAP numbers. Their operating expenses are up, of course. As a company grows this fast, you're going to have operating expenses increase as well. Operating income was 16.9 billion, which gives us a net income of 14.8. Those are all 600% gains year over year, which is pretty incredible, which is also making people very excited about where NVIDIA is going. As you can see, revenue by market platform, they break it down to data center. You can see the 22.5 billion that data center brings in, as opposed to 2.6 billion of gaming GPUs. That's their graphics cards. And then, of course, professional visualization, automotive, and OEM and other. Oh, and hey, if you're finding value in this content, then go ahead and hit this like and subscribe button and do all the YouTubey things so that we can bring more of this content to you. NVIDIA is really banking on a couple things. One is their NVIDIA Hopper GPU and also their H200 Blackwell architecture, which is their data center CPU for doing all of the cloud computing and quantum computing as aforementioned. So all this is great. Every number that you look at with NVIDIA for this earnings call is up. They are just killing it. And if you look at their balance sheet with cash flow and on-hand cash, they have free cash flow activities of 15.3 billion, which on a 33 billion operating is very good, and 7.2 billion of on-hand cash. As you can see, they're pretty much in the positive for on-hand cash throughout the years. They're very good with their money. One thing that I wanted to note is the repurchase of stock. They started in 2023 with 10 billion and continued 9.5 billion in 2024. That helps their EPS, which sits at 25. So looking at their first quarter, they're just knocking it out of the park. I can see why a lot of people are getting into it and are very excited about it. But that brings us to that 2.8 trillion pound elephant in the room, which is, you guessed it, the market cap. This is unusually high for a $33 billion operating income company. In contrast, Microsoft is much, much bigger at $122 billion, and they're at $3 trillion. At this rate, it seems like NVIDIA is gonna overtake Microsoft. Now, looking at their shares outstanding, they have 2.46 billion shares already outstanding, which also brings us to their 10-for-1 stock split. So if they have 2.8 billion stocks already, and there's a 10-for-1 stock split, and that goes up tenfold, how far can that continue to raise? One thing that we also don't like is their dividend. Right now, they're sitting at 4 cents per share. They're going to increase that to 10 cents per share. But let's put that in perspective. So if you put $10,000 into NVIDIA today, before the January 6th split, you get 10 shares at 10 cents per share. That'll give you $1, one whole dollar for your $10,000 investment. After the 10-for-1 split, you'll get 100 shares, but that is going to go down to 1 cent per share. So you'll have that $1. And that, my friends, is why we're not investing in NVIDIA, because no dividend, really. They do, but it's not. So why is NVIDIA doing the 10-for-1 split? Well, they're doing it to capture retail investors and to lower the cost of entry enough for them to invest. So it's at $1,100 now. It'll go down to about $110 per share. They think that they're going to capture a lot of the retail investors by lowering the cost of entry. What they don't see, and I don't know why they're not looking at this, is most of the brokerage accounts that the retail investors already use fractional shares. So they could already invest in NVIDIA in fractional shares and still partake in the NVIDIA Moonfest. So let's take a look at some of the ratios. You got the PE ratio of 65, the forward PE of 43. We got the price to sales ratio at 35, price to book ratio at 56, and it goes on and on. You could look at all of these and they all pretty much scream overvalued. If you do the calculations, there's a couple different ways you could calculate what the market cap should be. It comes in right around 600 billion to 900 billion, which is what's being shown here. And you look at the analysts' ratings, very good, but most of them are saying it's overvalued. So what do you do? Are you going to wait? Are you going to buy now and then just take the split? Or are you going to get in at the $110 and hopefully it goes back up to 1,000 and you 10 times your money? Let us know in the comments. But we think, since Mr. Market is irrational, perhaps after the split, there will be another significant jump, but eventually there'll be a correction, as we saw with Tesla, especially if NVIDIA fails to deliver on their promises or there's an economic downturn or another supply issue. But for now, they're crushing it, flying high. Good job, NVIDIA. Thank you.